The US Treasury Department has revised its rules for reporting $10,000 in cash, a must-read for Chinese readers, a warning that might give you a cold sweat. Dear Chinese friends in the United States, let me ask you a question. Do you think that as long as you don't deposit or withdraw more than $10,000 each time, everything will be fine? If you nodded, what follows might change your perspective. The $10,000 rule you're fixated on is actually just the tip of the iceberg when it comes to US financial regulation. What's worse is that many people have made even more serious mistakes in their attempts to circumvent this rule. Meanwhile, various rumors are circulating in the Chinese community. Will the US impose taxes on cross-border remittances starting in 2026? Will buying a house with cash be subject to strict scrutiny? Which of these rumors are true? Which ones are fake? What are the new regulations that will truly affect each of us? Today, let's clarify all these matters at once. This episode is packed with information, and I highly recommend you watch it, as it concerns not only your wallet, but also your financial security in the United States. Part 1. What exactly is the $10,000 reporting rule? First, we must understand a very basic concept. In the United States, it is not illegal to deposit or withdraw more than $10,000 in cash in a single transaction or in a single day. This rule comes from a federal law called the Bank Secrecy Act. Its core requirement is that when banks or other financial institutions process cash transactions totaling more than $10,000 for the same person within a single business day, the banks are legally obligated to complete a document called a Currency Transaction Report, CTR, and submit it to the Financial Crimes Enforcement Network under the Treasury Department. Note a few key points. First, the report is submitted automatically by the bank, so you don't need to worry about it. Secondly, this is a routine procedure. Banks submit thousands of such reports every day. Being reported does not mean you have any problems, much less that the police are coming to find you. This is simply a data collection operation aimed at tracking the flow of large sums of cash and combating crimes such as money laundering, terrorist financing, and tax evasion. Similarly, business owners have a similar rule. If you receive more than $10,000 in cash in your business, you need to file Form 8300 with the IRS within 15 days. This is similar to bank reports. Both aim to ensure transparency in large cash transactions. Therefore, the conclusion is simple. As long as your money comes from a legitimate source and is well documented, even if the amount is large and deposited into the bank in one lump sum, it is perfectly fine, even if it is reported. What's truly dangerous is this kind of self-righteous behavior. Part 2. The real danger zone. Why is splitting deposits considered walking into a trap? The real landmine is when you deliberately split a large sum of money into several smaller transactions spread over several days at several banks, or by having different people deposit it in order to avoid the $10,000 reporting threshold. This behavior has a specific crime under federal law called structural dismantling. That's the most critical part, because structural splitting itself is a federal felony, no matter how clean your money source is, even if it's money from selling a house or years of legal savings. As long as you split your deposits and it's verified that your intention was to circumvent bank reporting, you've already broken the law. The logic behind this is simple. To regulators, it's quite normal for an ordinary person to have $50,000 in cash, but for someone to deposit $9,900 every day for 5 consecutive days is highly suspicious. It's like telling everyone, I have a problem here and I don't want to be reported. This protesting too much approach will actually make you stand out from the massive amount of transaction data and become the highest priority target for review. There have been many cases in the past where new immigrants or restaurant owners, unaware of this rule, habitually split tens of thousands of dollars in business revenue into smaller deposits, only to have their accounts frozen, their money confiscated, and even face criminal charges. Their biggest misconception is that it's okay if it doesn't exceed $10,000, but they don't realize that deliberately making it less than $10,000 is the real taboo. Therefore, remember the first golden rule for handling cash in the United States: better to be reported than to split it. Part 3. In-depth analysis of 2 major new regulations in 2026. Having clarified the older rules, let's talk about the upcoming new changes. New Regulation 1. 1% tax on cross-border remittances, applicable to cash and equivalents. This news has been circulating in the Chinese community for a long time, and now it can be confirmed. Yes, it is true. According to the passed bill, starting the 1st of January 2026, the United States will impose a 1% sales tax on certain cross-border remittances. But don't panic. This tax doesn't apply to all remittances. Its taxation targets are very precise, focusing only on cross-border remittances completed using physical payment instruments such as cash, money orders, or cashier's checks. In other words, if you bring a wad of cash to a remittance company branch to send money to your relatives in China, you will need to pay an additional 1% tax in addition to the handling fee. The Ministry of Finance objective is clear. By increasing costs, It aims to guide funds from these hard-to-trace offline channels back to the highly transparent online banking system. So, how can you legally avoid this tax? The method is very simple. As long as you make the wire transfer, ACH transfer through your own US bank account, or use a debit or credit card to pay for the remittance, you will not need to pay this 1% tax at all. Who will be most affected by this new regulation? Those who are accustomed to using cash, do not have a US bank account, or frequently go to physical branches to make remittances are the first to be affected. Starting in 2026, the cost of this traditional method will increase significantly. The safest and most cost-effective way is to deposit the funds into your own bank account first, and then transfer them out through the bank's channels. New Rule 2. Through the door, reporting for all cash home purchases. The second new change is even more significant, targeting the real estate market, particularly buyers who want to use cash and shell companies to conceal their identities. The US Treasury Department's Financial Crimes Enforcement Network, FinCEN, has issued a final rule requiring the implementation of a new residential real estate reporting system nationwide, starting March 1, 2026. The core of this new rule is that any residential property transaction conducted entirely in cash or without traditional bank loans in the name of a company, such as an LLC or trust, must be reported in detail to FinCEN. The most crucial point of this report is to penetrate the shell of the company or trust you use to buy a house and report all the detailed personal information of the true beneficiary behind it. That is, you, who ultimately pays the money and controls the entity, including name, date of birth, address, driver's license, or passport number, to the federal government. What does this mean? In the past, many people like to set up an LLC shell company and then use the company's name to buy a house with all cash, thereby achieving anonymous asset holding. After the 1st of March 2026, this road will be basically blocked. Whether it's a title company, a transfer lawyer, or another settlement institution, they all have a responsibility to collect and report this information. This new national regulation is an upgrade and expansion of FinCEN's geolocation orders, GTOs, which have been piloted for many years in areas such as New York and Miami. Practice has proven that this kind of strict regional investigation is very effective, and now regulatory agencies have decided to extend this net nationwide. Therefore, if you are planning to buy a house in the United States in cash using a company or trust, you must be prepared that your identity information will be reported to the government in a completely transparent manner. In this situation, ensuring that your funds are 100% legal, clear, and verifiable becomes crucial. Part 4. Summary and the 4 Golden Rules. Okay, let's summarize the 4 golden rules that Chinese friends should follow in the current increasingly stringent financial regulatory environment. First, completely abandon the illusion of splitting deposits. This is the most unwise and dangerous act of walking into a trap. If the money is legitimate, deposit it openly and in one go, and keep all proof of its source. Second, cross-border remittances are embracing the banking system. Starting in 2026, in order to avoid the 1% tax, and for the safety of your funds, try to send money to your family through your own bank account. Say goodbye to cash and bank drafts, and make every transaction traceable. Third, those who buy a house with cash should be prepared to have their identity transparent. If you plan to hold real estate through a company or trust, you must accept the fact that the information of the actual controller behind it will be reported. The era of anonymity is coming to an end. Fourth, and most importantly, prepare a legitimate story for every penny you spend. Whether it's a house sale contract, company revenue records, gift certificates from relatives and friends, or customs declaration forms for carrying cash upon entry, these documents are your talismans for financial integrity in the United States. Please remember, in the United States, compliance equals security and transparency equals freedom. Any attempt to hide, circumvent, or take shortcuts may be identified as a high-risk signal by this powerful system, ultimately causing you unnecessary trouble. U.S. financial and tax regulations will only become stricter and more transparent. If this content made you realize something new, please remember to like it and share it with your friends who are running small businesses, planning to buy or sell property, or who often need to send money home. Your small act may help them avoid a significant financial crisis. Feel free to leave any questions you encounter or share your experiences in the comments section. See you next time.